Okay, let's get started. Good morning, Charles. How are you today?
Doing great, Ed. Thanks.
Good. Good. Hey, thank you for taking the time to join us today. Our program really is going to be pretty powerful, and I believe we'll open up several sales opportunities for you in the senior marketplace. Uh, Charles Durfee is going to talk to us today a little bit about how he does uh, an engagement with the seniors that leads frequently to legacy planning and other product sales. Charles has often been quoted as saying, that final expense is just the door opener. And today he's going to talk to you about how he goes through the engagement process, what types of sales that leads to, and then what we need, what you'll need to do in the actual engagement with the client. So with that, Charles, thanks for being with us today. And you look like you're ready for an appointment.
I am. I got one right after this. So in the senior market. So hopefully I'll apply some of my own advice to the situation today. So
Super.
uh, all right. Well, I think that's a great lead in, Ed, because when I started out in this business, maybe it's because my age has been over 30 years. I was working primarily in my age group, and I always kind of looked at the senior market as, man, why would they buy from a young guy like me? Or, my hair's not the right color, which it is today. How do I really cut into that market? What opportunities are in that marketplace? I was really kind of a product focused. That's working for Foresters back then. We had 3 or 4 products, and you had to really just kind of focus in on your in what you can do and do it well. And that's not necessarily a bad thing because it kept me really focused on activity and those things that matter. But as I've really, let's say, matured, I don't want to say age, but matured in this marketplace, I started to realize, man, the senior marketplace has a tremendous amount of sales opportunities in it if you know how to approach it the right way. Uh, I kind of looked at it as when people got to be 70 and older, when I was younger, as their needs are met. What do I have to offer? They're maybe not their best insurability risk. And, probably they've already got a financial advisor they're working with, or why would they need me? Right. And what Ed led to was kind of how I discovered just the a final expense marketplace as a door opener. I'll share briefly. You've all heard the story probably, but it kind of opened my eyes to a whole new world because I went from approaching what we call legacy or that senior marketplace with a different mindset. It occurred to me, man, with all these baby boomers, if you watch television, I don't watch a lot of it, but anytime I turn on the television, all the advertising is geared to this marketplace. And that's kind of where the final expense kind of rung, because if you turn on any network today, other companies are doing your advertising for you. They're sharing concepts, what I call concepts. They're sharing with people, you need to have some kind of final expense planning, or you need to know the understands the pros and cons of annuities. I mean, just turn on the TV today and we can leverage those marketing dollars to build our practices. I love to distill those concepts because as advisors, we can do way more than what they can do on those TV ads. We offer so much more in a relationship than what they have to offer on an 800 number. Okay, so I want you to start looking at some of those ads and thinking about it, because let me see. Let me just try to scroll down my page here. I don't know why it's not doing that. Advanced slide. Interesting. Okay. So that led to, where as I go out and see my clients now that are what we'd call their senior market, we need to understand that kind of what we're approaching. And let me just start off with this before I get to these concepts or ideas. Up to your retirement, the primary focus of most people is accumulation. Accumulate, and that's great. And we can help people in that marketplace. But what you need to program yourself to think differently is when you're dealing with senior marketplace, they're still in the accumulation mindset, a lot of them. they're worried about their retirement. How am I going to fund it? They're worried about all these other things I'm going to discuss. But the retirement is for 35 to 40 years, their stockbroker, whoever's been approaching them on accumulation. And, we've had seminars or coffee with closers about what we call fourth quarter planning and that. But our role is to help them change that mindset to where I know you've been accumulation focused your whole lifetime, but let's talk about some other strategies I'm working with people now that they've reached retirement to where you've got your bases covered or that apply to your current situation. You can call that legacy planning. You can call that fourth quarter planning. I just call it, I call it different concepts. I share with them different things that clients their age should be thinking about. So you've got to think like they think. And so I like to share strategies I'm using with my other clients. So Ed opened up with saying, Charles, talk to him, you've used the final expenses, what you call a paid lead. And that's right, Ed. I started off when I first saw final expense life insurance. I looked at a product that was 35,000 or 50,000. It didn't matter, face amounts and lower. I thought, man, how do my clients need this? Until I was doing a review with one of them and it was sufficiently insured or had quite a bit of life insurance. And they said, hey, they were all proud of the fact they bought a final expense plan. And they saw that advertising on television. They golfed with their buddies and they were talking about final expense. And they said, we went out and got one of those, or you've heard it from your clients. I went out and prepaid my funeral. And it hit me that day that they're not looking at life insurance as life insurance. They've got enough life insurance. And that's exactly what my client told me. Charles, I needed a final expense plan. And it hit me. Well, that's what I do. So maybe I haven't done a good enough job letting them know that I'm in the final expense planning. So people buy life insurance, yeah, but they really don't. And it's the emotions and those things that we all know that sell our product, because it's not tangible and it's a promise for the future. And final expense really will offer them a different part of their planning. It's a different kind of a bucket or a different part of their planning. So I said, man, I need to go see every one of my clients that have life insurance and just simply ask them, when I'm doing a review, I know we've got your life insurance needs in place, but what are you doing around your final expense planning? That's one example. Or what are you doing? Here's some of the questions you can start asking your people. What are you doing with your required minimum distributions? These are just simple questions when you're dealing on an annual review with one of your senior clients that will just start to open a lot of new doors. They might tell you, well, we don't need it, or we're deferring it till 72 and a half now. They want to know about, that there's an older age limit and those types of things. And but these are just conversation points will allow you to start taking notes. In reviewing my clients, I start talking to the old versus new insurance, but I use terms also like, does your life insurance have living benefits in it? And we're not talking just the cash value or the tax advantage. What do you mean by that? Well, it's a great time when you get to your retirement to see if those accumulation products in your working years are now suiting your retirement needs, or your needs to access money on a tax favorable basis if something catastrophic occurs, like a chronic or a critical illness or a terminal illness, or in those types of things. Or what are you doing, or who are you working with right now? It's great that you've accumulated all this money. My appointment yesterday, we went on for 3 hours about repositioning tax liability. Talk to me. Great. You accumulated a lot of money. You don't have a money issue. You've got potentially a tax issue, especially on the way that could be passed down to your children. So what I want to stress with this first slide is, when you go in to see a person in their retirement years, go in with confidence and shift your focus from accumulation to protection. Really, that's what it's all about. It's when life insurance is really the most important in their lives, and it's the time most of them are thinking they don't need it. And we'll share some other ideas down the road with that. So down further on this presentation. So, here's another rule I've learned when you're dealing with people that have moved from accumulation to protection in their legacy years. Most retirees, they love life insurance. They just don't want a premium, right? They would love to have a a national life policy for $1 million for accelerated benefits. They're just, to them, it's a premium. It's like going and buying another car when my mother-in-law just wanted a new car. She's 80 something years old. She just doesn't want the premium, right? But she wants the car, right? So our job is to really help them find the premium. If you really think about it, let's help our clients get what they want. We're not paid to sell insurance. We're paid to help people get insurance. There's a big difference in that concept or that mindset. So that's where I start to ask the questions, well, what are you doing with those RMDs? Well, we talked about you're not needing them. Why aren't you starting? Why are you waiting? Why does everybody feel like they got to wait till age 72 and a half? They might be in the lowest marginal tax rates ever right now. Today's a good time to start a strategy, maybe to pull that money out systematically on a tax favorable basis, working with your CPA or whoever you're working with. So that's what I do. I help my clients start distributions early. Preferably, I'd like to see you at about age 59 and a half. And so we could, over a 13-year period, get all that money into a more tax favorable position. What do you mean by that? Well, I'm not going to wait on my RMDs depending on my tax situation, So that's just kind of where those previous conversations start to pay off. And they'll say, well, that's why it was a 3-hour presentation yesterday. Well, tell me more about that, right? Another thing you can ask, they don't want a premium, right? So have you started the process of consolidating your accounts to make it easier for your beneficiaries? Once again, guess my wife and my parents are both gone. My wife's down to just her mother. So I've got a mother-in-law left. And, she's working with us right now. All she wants to do is start to simplify things for the kids and grandkids. That's her mindset, wants to get rid of some of the old hand-me-downs or family heirlooms, whatever it might be. And that process has started kind of in our family. And so, this is how people are thinking. It makes me think, my clients, are you streamlining? How many, that drawer in the kitchen that's just filled with all of these different, policies or annual statements, or that file that's all cluttery. We need to help our clients go through a process of looking at those accounts and consolidating. And I just ask them, the way you do that is you don't worry about the dollar size or that. I just say, start the process of consolidating your accounts to make it easier for your beneficiaries or each other. Right? No, I haven't. Well, when are you going to start? It's important that you do that. Okay. And another question is, I ask a lot, are you at a point where your policies can be paid up? Or let me review the options to your current policies. Were they designed more for accumulation years or retirement years? What do you mean by that? Well, I would have to see them to explain it to you. So, these are just really soft ways of getting your competition's paper in front of you, right? And there is no competition, by the way. Majority of the time, they haven't seen that other agent for years, right? But this is a way of uncovering. What am I looking for here? Well, if they don't want a payment, and a lot of these times, a lot of clients will have a policy that's could be paid up or put into a, National Western Life has a tremendous single premium indexed UL option. You can put it in. They still got all the tax advantages of life insurance, and they're paid up. And we'll talk a little bit more about those options. Or 2 policies could be rolled in through a 1035, potentially into a new policy with living benefits, and you've improved their situation. Then another thing that we overlook is, if you're, especially a lot of retirees, if they're really frugal, they're not in a high marginal tax rate. My client yesterday, married joint, can make up to $78,555. I'm not the CPA, but I know that. Under that, he's still in a 12% marginal tax rate based on his adjusted gross income numbers on his taxes. He gets above that 78,555. He only goes to 22. It's a 10% jump, but it's not a 10% jump on $1. it's only a 10% jump on dollars above that. And that might be pretty favorable to start repositioning some of these assets. So everybody got excited about the Roth conversions, but why aren't we excited about the life insurance conversions? Why aren't we excited about all of the other strategies that do nothing more than shift tax liability in a more favorable basis, or potentially sets up a plan to where you're paying the taxes for your children? And that's where my conversation ended yesterday, is they want to pay, they've got the assets, they don't need the money, they can pull their money out at a 12% still and pay all the taxes on all their IRA money. So, and in doing so, we're repositioning assets. Refer back to the buckets of money, coffee with closers, kind of what we're doing around that. But it's just another way of better improving their financial situation without adding a monthly bill. None of these situations, if you reposition their assets, create an additional expense, and it'll help them achieve and get what they need for their family or want. Okay. So that always shifts me to, once we have the conversations, is as we get the paper out in front of us, or the contracts or the accounts, then, I take the approach of, there's three types of money: qualified plans, non-qualified, and tax-free. So I try to put things in piles for my clients to understand, because the difference is how they're taxed. I want them to understand in retirement, it's not about accumulation. It's how these plans are going to be taxed to you or your beneficiaries. The easiest way I've ever discovered of doing that is to physically put them in stacks or piles in front of the clients and educate them on the differences of what a retirement plan, it's all just the tax guidelines, not set by us, by the IRS, our government, right? So what are qualified plans, non-qualified plans, tax-free plans? Then once I got those piles of money, I ask them, how much of this money are you requiring to live on? And that's money to pay your bills today or to live on. And then I ask them, which pile are they pulling the live on money out of? Maybe what if they're right now at a adjusted gross income of $28,000 and they got 1 million in IRAs? They can move as a married couple, they could get another 50,000 out of there at 12% federal tax. But they're taking it out of their Roth IRA right now. They don't got a tax problem. They're at 12%, right? So I say, why aren't you taking money out of these accounts? Well, who's got to control those accounts if I'm going to share some strategies? I do. Not your broker down at Edward Jones, right? I need to be the one helping you systematically determine what's your live on accounts. Which are your leave on accounts? And is there a better way to position them? You don't need that money. And I hear that a lot more than you would think in very modest households. I'm not in a high net worth marketplace, right? I'm trying to move more towards there, but I'm not in that marketplace. And I get a lot of leave on money because they're conservative investors. They just they live within their means. My client yesterday has 2 million in assets, and he lives on one Social Security check, and they put his wife's Social Security check in the bank every month. Okay, that gives you an idea and on their lifestyle, right? The only adjusted gross income is they've got 50,000 already coming out every year into 2 Forrester life plans that they're overfunding to pay the taxes on the kids. That was our scenario yesterday. So they're not spending the money, they're repositioning the money and bettering their financial situation. So once you determine this is so important, live on and leave on money, then the leave on money, I can start moving into accounts like single premium options or et cetera. And then what's your both, so it's just, these are just simple terms, and they love to talk about live on and leave on, right? And they also like to talk about your buckets of money. My client yesterday was like, oh, is this bucket right here? This is our pass on bucket. Yeah. Okay. This is my money I can access tax favorable. Cash value in his life insurance, right? That he's building up over the last 4 or 5 years. So anyway, this is a great way, once again, just to summarize this page. When you accumulate your assets into 3 different piles, don't just do it and start about a strategy. Listen more, dig deeper out of these accounts, which is your live on, leave on, or which are both. And then we get to which strategy is best. Okay. once I know that, before you go much further and amaze them with your brilliance and all your designations and all that, you better make sure to ask them an important question, and that is, how's your health? Because I know Monty and I in the field all the time, you don't know how many times earlier on we've presented a great idea. We got really excited about the buckets of money in front of us that we could access or reposition. And the person looks as insurable as anybody else, and bam, right? Just had a stroke 7 months ago. You'd never known it, right? And so all that work, all that advice is taken away. It's like being a realtor showing a person $1 million home and they qualify for 400,000. Okay, you should have got them pre-qualified first, because once they've seen the $1 million home, you're never going to sell them a $400,000 home, right? You got to get them pre-qualified before you show them what they can't have, or you get nothing. You get nothing. It's not a good situation. So determine what strategy is best. And before you make any final recommendations, you got to get the health questions asked. Okay. Christy will appreciate this more than anybody, right? Or the suitability questions asked for the annuities and those types of, or any investment, right? So which is also a fact finder in itself, right? So how do we determine which strategy is best? Well, how's your health? See, the beauty of what we do as agents is we align our clients into the best financial situation based on their health, because the most tax favorable products require health. Now, we might not like that, but that's the beauty of what we offer. And that's the difference between your 401k plan that can't discriminate and life insurance, which allows you to get into different select risks. And unfortunately, the downside to that, like markets, there can be a big upside financially for people that qualify, and there's a terrible downside for those that can't. And some people, that's the day they're born. So when's the best time, obviously, to get a plan in place? Not when you're 70, when you're 50, and start building it towards it. But it's actually today. We can't delay. The best strategy, if you can get the most tax qualified plan, tax advantage plan for your financial situation, is at your healthiest point. And usually that's not going to be tomorrow. It's going to be either where we're at or somewhere in the past. So, agents all ask me all the time, when do we need to take action, or what are we going to do? Or my clients ask me, well, should we wait till age 70, or what's the best time to buy? I said, the best time to buy is today. The best time to put money in is today and start this strategy, because not everybody qualifies. I can hear Ira saying that, echoing out. He's, not everybody qualifies. How's your health, right? So if not everyone qualifies, then, does that mean they're out? No, we go back to those 3 buckets of money up there. And we say, okay, how can we improve the situation of this? We get some life insurance that's you didn't want anymore. You want to get away from the premium that can be consolidated. You can either cash that out and be taxed, or you can still 1035 a life policy to an annuity, preserve the cash value and still not have the maximum tax advantage, or you could do a reduced paid up. There's just so many different options you can do. But that all is determined by really their health. And that opens up a new set of conversations. We're back to some presentation in the future about how we deal with people uninsurable, right? So I just wanted to summarize today and just boil it down to this. There's huge money in the senior legacy marketplace. We went over the last Ed and FFP and IRA. We've done a great job over the last 2 weeks of talking about legacy planning. And this is kind of the third week of this, right? This is a huge marketplace. Number one, advertising is being done for us on television all day long. Only we offer a better option. Number two, the market's huge, right? 3, the senior marketplace, it's way easier to set an appointment with them, right? They're a much more trusting generation if you can be financially professional, but they expect professionalism. That is why I'm wearing a shirt and tie, whether I need it or not today, to go see that marketplace. There is a certain segment of that marketplace that expects their financial advisor to be in a shirt and tie. And I've heard it say, it doesn't matter in my state. It doesn't matter in my area. I've heard farmers tell me, don't wear a tie out here when you come see me again. Trust me, I worked in different markets, but I smile every time. I say it's out of respect and I can always take it off. But I only get one chance to make a good impression. Your financial matters matter to me. And, our clients love that. And so our job at the very end of this is to pair up a plan that betters our client's financial situation. So with that, that makes me feel good about everything I do every day. And I'll turn it back over to you, Ed, to see if there's any questions.
Charles, that's fabulous. And, I really like the open mind that you approach every one of these situations with, because as you shared with me, they're all unique. And you can never tell what that solution is going to be just by what the driveway looks like or what the house looks like, or what part of the country you're in when you're dealing with someone. A few questions that are out here. Number one, what typically is the most prevalent products you end up writing beyond the final expense insurance?
Single premium life insurance. When you consolidate those statements, if you're not getting in front of that senior marketplace that bought their products 40 years ago, what they're doing today is they're cashing it in. They don't know they've got options to pay up. Now, what they'll remember is their parents had a paid up policy, right? Their generation, their mom and dad had a paid up policy. So I always remind, do you remember your parents had a paid up policy? Yeah, well, you've got the options to do the same thing today. Let me show you the difference. And don't confuse a paid up policy with just leaving money in a policy like a universal life that still has a increasing cost of insurance that lapses potentially. That's not a paid up policy, because when I've got plenty of clients that have told me I got a paid up policy and their agent told them on a universal life chassis to quit paying premiums years ago, and their 60,000 is now down to 30,000, and it's going to lapse in 7 years, and they go, well, we still got the death benefit, right? And I said, no. As long as you pay that term rate internally in there. So it is a huge marketplace. That's where we write a lot of single premium, because they don't know there's a tax advantaged way. So what's being advertised on TV, that free marketing ad? It's we'll buy your life insurance, 100,000 face amounts or more. You guys see those ads out? I just saw them twice yesterday in Florida. Right? Mm-hmm. We'll buy your life insurance and give you cash. Well, do you want the cash or you want the tax advantages? They don't need the cash. It's leave behind money.
Very good.
Or annuities if they're uninsurable, right?
So annuities are still a large part of your business also, correct?
We got to start moving. You're going to see with this market fluctuation, guy, if you're not in the annuity business or talking annuities right now, people are wanting to reposition money. People are getting nervous. And if you don't have an approach or the simple questions you ask every time, you're going to miss that opportunity. A client wrote us a check yesterday just for being there. We weren't even there. We were doing a review and we didn't expect it. So dropped another 100,000 off Social Security money that went in the savings account. They just need to put into something secure right now. So it's just, you got to have the discussion points, and it all points back to those piles of money and everything that these 4 slides. It really is. It's that simple. Quit over. The advice I give everybody in this marketplace is to quit trying to overwhelm everyone with your brilliance about all your financial planning concepts and all this stuff, which I'm not making light of, and I hope it doesn't come across that way, and start talking to your clients about their current retirement needs, because they're still in the accumulation mindset. That's what I keep trying to tell people. These people are still trying to grow their money at age 76, 74. They got 2 million and they're living on one Social Security check. Okay.
Or if they had 2 million 4 months ago, they've got 1.6 million left, right?
Exactly. Well, no, I saw them about 4 years ago, so they still got their 2 million. So our products work in down times at their age, right? Suitability, right? They're in the right products and they're very happy with that. That's why they gave me more money yesterday, right? I wasn't the most popular guy when they were earning 18%, 22 their buddies, but I'm a real popular guy yesterday, right?
So a question popped up here. What what are the popular single premium life products that you're using? Are you in the hybrid long-term care, or how's that working?
For the single premium life products,
Yeah.
I use, it depends on an age. I use a lot the National Western Life. It's a easy process to get medically approved. Section 9 on the application just has the knockout questions. That's the knockout questions, right? And then depending on the meds you take, it's their net amount at risk. They underwrite on a very favorable basis up to $1 million going into these products. Major tax advantages, the opportunity to get a complete return of premium, and they got accelerated benefits. So, I don't spread my, business over 9 different companies. I usually use 3 or 4 major carriers that I trust in and do business with. So I use them primarily in most cases. We get into smaller face amounts, we can go into a surety or a couple other that we've got. Just contact Christy and her team, but majority of the time on amounts of 25,000 or over, it's National Western Life.
So, and just for those of you out there, Christy has posted in the chat room the knockout questionnaire. We do find National Western Life is earning a growing share of our agents' business. They are very easy to work with. The app is what we would call senior friendly, in that there's underwriting concession built in, and most importantly, it's got a guaranteed return of premium attached to it, so that there is no risk of losing your money. So if you're moving, as Charles was describing that case earlier, $100,000 out of a bank account that they've been depositing Social Security checks in, earning 0.03% or whatever that might be. Oh yeah, wait, the rates are going up now. It's 0.07%.
Right.
It's a no risk transaction with a great upside and an immediate increase in the size of your estate for your beneficiaries. Fabulous product. Check it out on the website. We've done plenty of training workshops on it. But if you're not appointed with National Western Life, you ought to do so quickly to add that to your portfolio.
Now, let me stress on that. With the return of premium, it's a leave behind product. Now they can access it. We get an emergency, you can do that, but you do not want to be selling it as in and out in 3 years, right? And I'm not saying anybody would, but it's only positioned in my clients as a leave behind money. They're leave behind money. Potentially live on, but it's leave behind money.
Yeah, and of course, if you're doing live on money, Charles, I mean, you're probably using one of the great annuity products that we offer.
Great annuity products or an overfunded universal life at their age, right? Or
if they qualify, sure.
Advantage with premium on deposits into a dividend. So we've got plenty of ways our team could to help you determine what's suitable. So,
and it's always just a phone call or a text email away from you. You can reach out to Charles, myself, Ira, Saul, Christy, or just go to the website and type in a little bit about the client, what you think, and we will present you with the options. So that's all part of design work that FFP is more than happy to do for you. Well, Charles, thank you very much. That was a great presentation. I think you emphasized all the right points about how to conduct the interview and what's in it for the client. I mean, you're always leaving them in such a stronger position, whether that's about their current supplemental income needs or how to best utilize the assets that they have and move them in most tax favorable basis to the place they're supposed to land. So I thank you for taking time before your appointment. Good luck on that appointment today. And next week, we will be kind of working through a really important, there's been a lot of changes in the annuity market in this in the last couple of years. There are new rules, new regulations out there, and companies have changed procedures almost across the board. Next week, we're going to have Christy lead a discussion on what is needed to make sure that you're able to place that annuity or single premium type business with the client. And it will save you a lot of headaches. We know from experience that the first 4 or 5 months of this year, we've had situations where cases were kicked out, frankly, and large commissions lost, and work not being done in the client's best interest because the agent was not quite familiar with some of these new guidelines. So please don't miss that. It's going to be a very important part of your business. So with that, again, thank you, Charles. Thank you, everyone, for taking the time to be with us today. We'll be back at you next week with a Coffee with Closers. And then following that, we're going to start a series of programs that will be focused on some of your practices and basically some of the experiences of your peers in how they built their practice, what are they doing, how they're reinventing themselves, etc. So we'll have a consistent group of broad range of practices that, I mean, everyone you're going to be able to pull a couple of diamonds out of to help you. So with that, stay tuned for what's coming. Thank you again for your time today, and good selling, everybody.